Next topic, renewal of bill of exchange. Sometimes the drawee himself comes to the drawer and expresses his inability to pay the amount on due date. He requests the drawer to cancel the old bill and give him a new bill for the extended period. If the drawer agrees, then first the old bill will be cancelled. For this, the drawer charges interest from the drawee for time of extension. The drawee can pay the interest in cash or interest can be included in the amount of new bill drawn by the drawer and accepted by the drawee. This process is called renewal of the bill. For example, on 1st February 2015, Ravi sold goods to Mohan for rupees 18,000. Rupees 3,000 were paid by Mohan immediately, and for the balance he accepted 3 months bill drawn upon him by Ravi. On the date of maturity of the bill, Mohan requested Ravi to cancel the old bill and drew a new bill upon him for a period of 2 months. He further agreed to pay the interest in cash to Ravi at the rate 12% per annum. Ravi agreed to Mohan's request and cancelled the old bill and drew a new bill. The new bill was met on maturity by Mohan. In this case, the following entries will be recorded in the books of Ravi and Mohan. First, journal entries in the books of Ravi. First entry for the sale of goods. Mohan account debtor to sales account 18,000. Amount of goods sold 18,000. Second entry, cash account debtor, bills receivable account debtor to Mohan account. Cash account is debited because Mohan paid rupees 3,000 immediately as cash. And for the balance amount, receivable is 15,000. For that, Mohan accepted a bill of exchange. Journal entry, cash account debtor, bills receivable account debtor to Mohan account. Second entry, for the cancellation of bill, Mohan account debtor to bills receivable. Mohan account debtor to bills receivable for the cancellation of bill. Third entry for the interest receivable from Mohan account debtor to interest. In this case, a compound entry is passed. For cancellation and interest, a compound entry is passed. Mohan account debtor to bills receivable to interest account. Mohan account debtor 15,300 to bills receivable 15,000 to interest 300. Then for new bill, journal entry, bills receivable account debtor to Mohan account. Mohan paid rupees 300 as interest. Journal entry, bills receivable account debtor, cash account debtor to Mohan account. Then July 7, bank account debtor to bills receivable. Bank account debtor to bills receivable account 15,000. Narration, Mohan met his new acceptance. Journal entries in the books of Mohan. First, for the purchase of goods, purchase account debtor to Ravi account 18,000. Then Mohan paid rupees immediately in cash. For that journal entry, Ravi account debtor to cash account, and for the balance he accepted a bill. For that journal entry is Ravi account debtor to bills payable. Here a compound entry has been passed. Ravi account debtor to cash account to bills payable account. Then May 4, bills payable account debtor, interest account debtor to Ravi. For the cancellation of first bill, bills payable account debtor to Ravi account. For the interest payable to Ravi, journal entry interest account debtor to Ravi account. Compound entry for that is bills payable account debtor, interest account debtor to Ravi account. Then May 4th, for the new bill, journal entry Ravi account debtor to bills payable account to cash account. Ravi account debtor to bills payable account to cash account. Cash account rupees credited is cash account rupees 300 is credited because Ravi paid rupees 300 interest of rupees 300 in cash to Mohan paid rupees 300 in cash to Ravi as interest. Then July 7, bills payable account debtor to bank account. Narration: met acceptance of the new bill on maturity.